Hello, traders. Uh, Friday was just horrible for the markets. We had a liquidity uh, scare in the markets, and our oscillators were all just completely pegged, and the markets just needed to take a break. And it had a lot to do with our the bonds, of course, the fear of the government shutdown this week, and the government being able to service their debt. Those fears really took hold Friday, and in the overnight session, the bonds started spiking over concerns over the debt and the government shutdown, and uh, quite frankly, it caused a liquidity squeeze that resulted in forced selling Friday, and that's a situation we haven't seen for a long time. Will it continue? I don't know. There are mixed signals. Looking at the candles by themselves, it looked really bad and broad. So we'll see how Monday opens to see how things go. I want to start with our bonds and exactly. I'm going to delve down into them. Some things that I was seeing. Um, it was a massive sell-off Friday. We broke a primary trend line, uh, but we do have substantial price value at these levels. So that does not necessarily mean we're just going to continue to go lower. Okay. Now, if you look at this view at our intraday on our TLT, something that I want to point out here, as we hit lows 2, 3, you know, 1, 2, 3 o'clock there Friday, uh, we actually started seeing some buying, short covering. It may have been short covering or buying in the bonds, suggesting we might have a short term low in the bonds and they may have overdone it. So we'll see how things go Monday, but that was a massive move on the bonds. Very difficult to sustain moves like that. So, but there is reason to think that treasuries, we have had some responsive um, selling at this point in the past. Okay, this is kind of like this seems like a support resistance area on our TYX. We came up and bumped right into that. So just keep in mind we got a trend line right above us to cap us out. And I do want to show you also the monthly on this. As you can see, we've been in a very long-term downtrend. And I know people are a little concerned about the interest rates, but the downtrend is still bearish. Okay, we are coming off of an oversold situation here. Can interest rates go higher and tag this trend? Of course. You know, if this is a sustained shutdown with the government, I definitely see that as a possibility. So, but we haven't even broke the first trend line on the interest rates yet. So just keep that in mind and in perspective. Now we're only 2 days into the month, and that is a little concerning since you know we've got the entire rest of the month to allow this monthly chart to play out. But we did come right up and tag the top of our Ichimoku cloud. Okay, and this has acted as a resistance zone in the past. We are starting the month out across of this one trend line, so it's quite bullish on the interest rates. So I definitely see us coming up and tagging this probably this week, tagging this trend line, and then we'll see from there. Uh, but we in the past we have rejected any moves above this downtrending Ichimoku. We've looked above and then failed. So the trend has actually not changed one bit on the interest rates. Uh, but there is reason to believe that we might be seeing a change in character in interest rates, especially, you know, next week we get a brand new chairman of the Fed. So, and that couples a lot of the issues that's going on here. Yellen's leaving. There's uncertainty to where interest rates are going with the new administration, and so yeah, there's definitely a reason to believe that the low interest rate environment is a thing of the past. Some quick sector charts. XLB just completely got dumped Friday. We had this rally up on the tax reform, and they took it all back Friday on a forced liquidation in our material stocks. I think the higher interest rates spooking the markets, that the growth that we were planning on getting from all this stimulus is actually not going to materialize because the interest rates are going to take a lot of it back. So the materials just got completely decimated. Logic would dictate we're going to come down to the cloud, that the move in the bond materials is not done. It's important to note this prior volume point. There was prior volume at this point, and if you look at this view right here, we were getting a little bit of short covering and possibly buying in the materials going into the afternoon Friday, despite the sell-off. Okay, so keep that in mind. There was some responsive. It wasn't just a straight down action, even into the close, even though the price was suggesting that. Okay, your XLV, your healthcare. You did see they were trying to defend this trend line into the afternoon, and it was the very end of the day that they were forced to break the trend line. And this is a low volume point of control. This typically right here would be a buy point on your healthcare because of the low volume POC. So it depends on how the markets open Monday. But if the markets open real bad, then yeah, there's most definitely a chance that we're going to come down to 86 on our healthcare. So just keep this one on your radar. At the you can tell right here that earlier in the afternoon, Friday afternoon, they were trying to defend that trend line, and it wasn't until the very end of the day that they were forced to liquidate and break that trend line. So keep this one in mind here, that they were really trying to defend that trend line, and we could easily have a responsive bounce in the healthcare. Your XLF. We have a large volume point of control that we were closing at on Friday. Okay, and they were really dumping it into the close, but I do want to show you another chart. Price was dumping. Our Goldman Sachs and Citi, they were just getting destroyed right into the close, but they were trying to. There was some short covering at these levels, so keep that in mind. Late afternoon, they were not positive that the markets were going to continue lower. So it wasn't like they were just coming in there and just throwing everything out with the bathwater, okay? There was some responsive buying happening, even though the price action was not showing it. Now, on the flip side, into the close, the markets were just falling apart. There was some responsive buying into energy off this trend line. So just keep that in mind, this high volume point of control on your monthly here. It seemed to have some responsive buying at this price. So like it's gone too far too quick, and there is huge open interest to the long side in crude oil. So we might have found a bottom in energy. And this chart here shows you what was happening while everything was just falling apart yesterday or Friday. Energy at these levels was getting some short covering. I'm not saying they are actually buying, but they were at least short covering at those price levels as of Friday. Your XLU has been out of favor for a while now. We are at a range bottom on XLU, and we did find some buying Friday. So just keep that one on your radar as possibly a long position. As you can see here, a little bit slight short covering into the close Friday. When everything else was blood red, they were covering their positions on the utilities. Okay, another one, your XLK, your technology. I think this had a lot to do with your Bitcoin. We do have a responsive potential buy area right here. We are right on our support line for our Ichimoku. So keep in mind that there is a potential for a bounce for technology if interest rates stabilize and stuff and the market stabilize. I know Friday's candles looked really bad and they were horrible closes, but if we were to find some responsive buying, this is the bounce point for your technology. Now your selling was accelerating into the close for your technology, right down to that trend support. So just keep that in mind. This is a contrarian view. I mean, I don't really like seeing the selling right into trend support it going into Monday. So there's a lot of risk in the technology being able to hold up Monday morning, especially if Amazon starts to slide. Now I'm going to go quickly into the sectors that just more had a neutral close. I mean, the markets were really selling, but the selling pressure wasn't intense, okay? And your industrials for one. So that suggests that, you know, they were selling it, but they weren't forcing the issue, okay? So that's a less bad area. That there's still some interest in the industrials, even at this price point. Your retail, XRT, not nearly as intense selling pressure. I think it's had a lot to do with Amazon because they had really, really good retail results. So this is one sector that was holding up. As long as Amazon continues to hold up, I can see our retail holding up. So just keep this one in mind. And in the same, along with your retail, is your consumer discretionary. They were trying to short cover into the close on your. The price action doesn't reflect it, but they were really people were really concerned about holding over the weekend on consumer discretionary. So that is a bullish signal possibly for a bounce Monday. Your consumer staples have already had a pretty good sell-off, and they were more neutral on consumer staples. This was more of a defensive area. You didn't see blood in the streets on consumer staples. I mean, this falls in line with consumer retail and stuff, and so they just didn't seem to want to throw the cat out the door, you know, with consumer staples. And a final thing that I look at as a leading indicator are my transports. And we got short covering into the close Friday. So keep this one in mind. I know everybody wants to sit there and think the markets are just going to fall apart. But I have to personally think that there's a decent chance after looking at these charts we're going to see a bounce Monday. So just keep that in mind. That's my perspective on things. We'll see how the markets open Monday morning. Thanks a lot for your time.